You know, the market is a mirror, not a mystery. It reflects back the collective beliefs of everyone participating. At first glance, it looks complicated, unpredictable, even chaotic. But it's not. It's the same stream of human thought and emotion, repeating over and over under new circumstances. Traders come to the market hunting for formulas, codes, mechanical certainties, something to erase uncertainty. But there is no formula. There never was. What exists is structure within uncertainty, the rhythm of human behavior, the recurring patterns of belief, fear, and euphoria. If you can align your perception with that rhythm before the crowd recognizes it, you gain an edge. Not a permanent edge, just one defined by clarity and confidence in the moment. That's all you ever need. The question is, can you stay mentally still long enough to perceive it clearly? Most traders can't. They chase every tick, every price movement, every illusion of control. They mistake activity for progress. They're looking so closely at the bark of one tree that they can't see the forest breathing around them. The big money, the real growth, doesn't come from reacting to every flicker. It comes from perceiving context. It comes from recognizing the broader wave and aligning with it. That's the difference between a gambler and a consistent trader. The gambler reacts to noise. The professional synchronizes with flow. Ask yourself, which mindset are you operating from? The secret to recognizing a market wave before it builds isn't in the data. It's in your awareness. You have to listen to the market, not to others' opinions or the seductive narrative of certainty. The market is always communicating. You just have to quiet your inner noise to hear it. Prices reflect collective beliefs shifting in real time. When something behaves stronger or weaker than the overall environment, that's the market whispering its truth. Are you still enough to hear it? The market never lies. Your interpretation does. The tape is neutral. It simply reflects decisions made by thousands of minds. The truth is hidden not in prediction, but in behavioral patterns, how the market reacts under pressure. When bad news hits and price refuses to fall, that's strength. When good news can't lift it, that's weakness. Most traders overlook these cues because they're mentally impatient, desperate for action, equating movement with progress. Haven't you felt that compulsion to do something just to feel in control? That's the enemy of consistency. Patience separates the consistent from the chaotic. You can study every chart and read every opinion, but if you can't stay centered when there's nothing to do, all of it is wasted. The biggest profits don't come from constant trading. They come from waiting for alignment between your perception and the market's message. Every beginner wants to buy the low and sell the high. That's the illusion of control. The professional aims for the probable zone, the middle of the move where belief and structure align. That's where confidence lives, not perfection. Think of the tide coming in. The first small ripples mean little to most. They're dismissed as noise. Then come larger swells, and finally, the full wave everyone recognizes. But the trader who noticed those early ripples didn't need confirmation. His awareness was already aligned with what was unfolding. That's what it means to think in probabilities. You don't need certainty. You only need enough evidence to act without fear. Most traders can't believe what they see until the crowd validates it. But by then, the probability window has already passed. The market rewards those who trust their process, not the crowd's approval. To operate this way, you must learn observation without expectation. Guessing is the ego's attempt to control the uncontrollable. Observation is surrender to what is. Every stock, every market has a personality, a unique way of expressing collective emotion. When you study it without bias, you begin to sense accumulation, exhaustion, and imbalance. That's alignment with flow, not prediction. Haven't you noticed how some moves feel right or wrong without data to prove it? That's intuitive calibration born of experience, not impulse. Back when I started, I had no special information, just the flow of price and volume. Yet it was enough because I was watching behavior, not chasing explanations. By the time the story hits the news, it's already history. Fear and greed haven't changed in a century. These emotions generate every wave. Price doesn't move because of opinions. It moves because beliefs change. When fear begins to take hold or greed starts to rise, the market reflects it immediately. Can you learn to recognize the emotional shift before it's visible on the chart? The signs are always there. A market that refuses to break under bad news or can't rally despite optimism. Those are emotional footprints. But most traders won't trust their observations without outside validation. They wait until the majority agrees, and by then, they've lost the edge. The crowd always reacts. They never perceive. That's why the crowd always loses. True consistency requires psychological isolation, being at peace with your own analysis even when it contradicts the herd. Trading is lonely because alignment with truth rarely matches mass opinion. You'll often feel foolish buying when everyone's pessimistic or selling when everyone's euphoric. But those are the trades that flow with probabilities, not emotions. Can you endure the discomfort of being early? The discipline to look wrong in the short term, to be right in the long term? Spotting waves early isn't about formulas. It's about self-mastery. Human nature repeats itself endlessly. Once you understand the emotional patterns, it's like recognizing an old friend. The same fear-driven collapses, the same greed-fueled surges, only the tickers change. The challenge isn't recognizing them, it's acting when your mind still doubts and your emotions scream for reassurance. The market pays for alignment and execution, not knowledge alone. The professionals act when the structure supports it. The amateurs wait for comfort. The wave begins small, subtle, a narrow range, quiet strength. Then it builds as confidence grows, and finally, it explodes when the crowd rushes in. By that point, the professionals are distributing, and the latecomers are trapped. You've seen it happen again and again. Every time you wait for certainty, you exchange potential for safety. And safety is an illusion. The hardest part of trading isn't seeing. It's believing what you see and staying with it. The mind constantly tempts you to exit too soon, to grab small profits, to protect ego. But the real move extends beyond comfort. That's why the skill isn't in intellect. It's in psychological endurance. The market will always test your discipline, tempt you to abandon your edge for emotional relief. Can you remain neutral in the face of temptation? A consistent trader doesn't seek tips or validation, only clarity of behavior. Strength where there should be weakness, weakness where there should be strength, those are the tells of shifting belief. Every tick represents a battle between fear and greed, conviction and doubt. The market itself doesn't care who wins, it's neutral, like a mirror. The moment you impose your opinion on it, you separate yourself from its truth. To trade effectively, you must release ego completely. Be willing to be wrong quickly, without resistance. The market doesn't owe explanations, it only presents opportunities. Your job is not to make the market do anything. It's to flow with what it's doing. Every moment you fight reality, you're reinforcing fear. Every moment you accept uncertainty, you expand clarity. Humility isn't weakness here. It's freedom. The biggest rewards come not from brilliance, but from alignment. being in tune with the rhythm of the wave. Small, frequent trades, driven by impatience, drain energy and